Lush, and I'm here inside the Hub Culture Pavilion in Davos. Delighted to be joined now by Michael Spence, Professor of Economics at NYU, amongst other things. How optimistic are you about this growth scene that we're talking about here in Davos?
I think long term, the prospects are pretty good because these technologies, although they'll cause dislocations, will actually create tremendous potential. But in the short run, for a whole variety of reasons, some of which are related to dislocations caused by this, disintermediation of jobs and so on, plus some, more general sort of global headwinds that have to do with the way we're putting together growth, make me somewhat more pessimistic, even than most of the people around here.
So let's talk about some of those. We've got commodity prices, which have fallen.
Yeah, big setback for the emerging economies.
Mm-hmm. Oil also very low, but you have an interesting story about that.
Yeah, so I'm not an expert in this. It's fairly clear what happened. Maybe demand growth was a little below expected, but in fact, the experts say demand is pretty persistently growing. Big supply shock from the shale, oil and gas, and the Saudi/OPEC, configuration, which is not absorbing the shock. But according to my friends, there's not that much extra, pumping capacity relative to the 95 million barrels a day we're consuming. Mm-hmm. And if we don't expand capacity, the growth in demand will catch up in like 12 to 18 months. Mm-hmm. Meanwhile, investment that would expand that capacity is being shut down. So there's at least a reasonable scenario in which oil prices first level off and then people realize we don't have the capacity and there'll be a spike.
What about levels of indebtedness? We've got low interest rates. Have countries been looking after their debt?
Well, yeah, if they're over-indebted, they've been holding the fort, but at least on the sovereign side, which is important because an over-indebted sovereign government, loses flexibility, to do things that are supportive of growth in the medium and longer term. So they're kind of holding the fort, but what they're not doing is delevering. Mm-hmm. And the reason is it's hard to delever without killing more growth. So it's a bit of a trap. That as long as the ECB in Europe keeps the interest rates low, they're not going to get into trouble. But unless we get more growth and more inflation, we won't have the levels of nominal growth that will help them reduce the indebtedness over time. So it looks to me like a bit of a trap. What's not happening is monetary policy in lots of places complemented by growth-oriented fiscal, structural, and other activities that won't solve the problem overnight, but will help in the medium term. One of the things that's very striking about the global economy is that not everywhere, but in very large swaths, both public and private sector investments just way below what you need to sort of generate acceptable levels of growth. So this leads me to say the growth path we're on looks to me to be both fragile and not likely without significant changes to generate, a real uptick in the foreseeable future.
What about the banking sector? There was an enormous reset, if you want to use that word, in banking. There were a lot of changes to regulations, which now everyone's having to deal with.
Yep.
Is it cleaned up, or is there more trouble to come?
Well, it's substantially cleaned up, and the regulations, there may be some adverse consequences. I've heard that the new regulations in Europe in the insurance industry are causing excessively heavy constraints on longer-term investments of the type that insurance companies and pension funds tend to want to make. But it varies with where you are. So in Italy, where I live, there's clearly a residual and maybe substantial problems on bank balance sheets, non-performing loans, and so on. There was a bout of a market convulsion yesterday about this, and we clearly have some banks that are in fairly big trouble. In America, I think the big banks are largely kind of cleaned up in terms of the balance sheets. They get into trouble for misbehavior, but some of the smaller banks are regional banks, less so, and there's quite a lot of distressed debt, or worse, associated with oil price drop in the shale area. So that won't help, the banks that have been doing the lending in that area. And so In England, I think it's not fully done, but fairly far along. In Germany, most people think that there's residual, issues there that don't have to be dealt with now in this low interest rate environment, but it's not a fully healthy set of balance sheets. So it's a mixed picture.
Okay.
There are a lot of non-performing loans, actually and potentially in China. It won't necessarily upset the apple cart because they got a lot of assets they can use against that, but it does worry people.
Thank you very much for stopping into the Hub Culture Pavilion, Professor Spence, and I'm Edie Lush.
Thank you.